let's now look at our stories. And concerns about inflation outlook have forced the Bank of Ghana to keep the policy rate unchanged. The Monetary Policy Committee of the Bank of Ghana left the rate at which it lends to commercial banks at 30%. George Wiafe was at the Monetary Policy Committee's press conference and has filed this report.
Addressing the media here at the boardroom of the Bank of Ghana, Governor Dr. Ernest Addison maintained that development on the global market ensure that they should still watch the space before they react when it comes to the policy rate.
But core inflation remains high and is declining slowly due to strong labor markets. In the outlook, central banks are expected to maintain policy rates at high levels for much longer periods to contain the still elevated inflation levels relative to targets. The prevailing higher policy rates, long-term bond yields, and renewed strength of the US dollar could continue to keep global financing conditions tight, with consequences for emerging market and developing economies.
The governor has also been updating us on the latest on the meetings with the external creditors, whether the funds will come in as required from the IMF when it comes to the second disbursement.
I can tell you that from the last briefing that I had, things were moving relatively well. Over the weekend, we all saw the news of Zambia and what had occurred regarding the restructuring process in Zambia, because the creditors cannot agree on who takes a bigger haircut. This is really, should it be the bilateral creditors or the bondholders? And unfortunately, this has occurred in the case of Zambia. We are hoping that that will not happen with the discussions on Ghana.
He's also been speaking about what should we expect or the timing for the cocoa loan syndication and whether it will indeed come on this year as expected.
We expect the cocoa syndicated loan to come in before the end of the year. I have talked to Cocoa Board and they are very hopeful that the loan will be disbursed sooner rather than later.
The governor has also been giving us some update on the latest when it comes to the Financial Stability Fund. As she says, it has already taken off.
So the fund, to the best of my knowledge, is almost operational. And maybe we need to get the ministry to clarify the exact date that they intend to launch it. This is really what is not clear. We probably need an event to launch the Financial Stability Fund, and then it will be clear to everybody that the fund is operational.
Is the Bank of Ghana going to strictly enforce the zero financing policy? This is what the governor had to say.
2017, 2018, 2019, zero financing. So the only exceptions came in the year of the pandemic and, of course, the crisis year of 2022. So we are as committed as can be in terms of sticking to this zero financing criteria.
Commercial banks' deposits have gone up significantly, but they are also not lending. So where are these banks investing? The governor of the Bank of Ghana, Dr. Ernest Addison, has been giving us some insights.
For the first time, I gave you how much we have withdrawn in terms of liquidity, right? From the banks, from the system, of nearly, 44 billion. So the money is with me.
From the boardroom of the headquarters of the Bank of Ghana, this is George Wiafe reporting for Joy Business.
And we've got to interrogate some of the issues that came up from that MPC meeting. Let's go on Zoom and speak to economist Dr. Patrick Esuming. Thanks so much, sir, for joining me on Business Live, and good to see you. Now, first off, do you agree with analysts who say that the gradual decline of inflation really should have made the MPC reduce the policy rate?
Good evening, Pius, and good evening to viewers. I wasn't expecting that the policy rate will be reduced, even though inflation is trending now. You have to understand that we are way off where we should be going to the medium term. I mean, way beyond our medium term target. And we haven't gotten to a stage where we can even begin to think that there's time for us to ease off. So I think the decision to hold the rate is just about what I was expecting.
Justifiable, you think? Now, again, do you think that keeping the policy rate at 30% will continue to negatively impact on the cost of credit, especially over the period which we've seen, the policy rate, being reduced? However, it doesn't reflect the various lending points.
I think the cost of credit will remain high for the foreseeable future, even if they start, easing up the policy rate, reducing it. We cannot expect that it is going to go down substantially. That's not how central bankers act. You take small steps and you observe its impact on the economy, and then you decide. I think the other side is the general uncertainty and risk associated with doing business in the country. It's not just the policy rate that goes into the pricing of loans. You have to understand that if risk of giving loans, if NPLs are rising, you expect that banks will add a higher risk premium to the cost of credit. So all put together, I don't think the cost of credit is going to come down anytime soon.
I see. I'll come back to that, but let me pick your thoughts quickly on this. The governor, have been outlining some measures. One, to unify the currency holding for the cash reserve ratio requirement on foreign currency denominated, credits. Where do you stand on that?
Essentially, a monetary tightening measure. I think the cash reserve ratio for domestic currencies, I think it was standing at 14%. And for the foreign currency was standing right around 12%. So it's not just unifying and finding an average. It's actually a rise on either of them. So it's actually a monetary tightening measure. So it is obviously going to help. And I think the policy statement made it clear that it's part of the liquidity management to try and mop up additional liquidity. So even though we didn't see a tightening through the monetary policy rate itself, there is a tightening through the increase in the cash reserve ratio.
Dr. Patrick Esumeh, let me take you back to your earlier point you made about the not ready for, basically it's not time for us to see a drop in policy rates. What time is suitable? What time is it for us to have policy rate reduced so that businesses can smile, so to speak?
I think when you look at the framework that we operate, the inflation targeting framework, the policy rate is mostly tied to where the direction of inflation and risk to inflation. And if you have a target that has an upper band of 10 and you are currently upward of 35%, then you begin, there's no way you should be expecting that the policy rate should be coming down, regardless of how high it is currently. And there isn't a specific time frame as such. I think it depends on when we begin to see inflation come down so substantially, close to where the target should be. So as far as we remain upward of 300% over our medium-term targets, I don't see the rate coming down any soon. The central bank might decide that maybe when we are close, we probably don't have to get all the way to 10 before we see some reduction. It also appears that the other side, where the real sector, appears that the weakness is softening a little bit. If you look at the growth rate for the first half of the year, it's been a little higher than anticipated. And then also, even though the real composite index of economic activity is still negative, you realize that it is, the extent of contraction in real terms is reducing on, periodically. I think if you look at the last 5 readings, even though the growth rate is still negative, it's getting smaller and smaller. So all of those point to some sense that maybe the weaknesses are not getting worse. So if you put all of that together, you wouldn't expect to see a rate reduction anytime soon.
And what should be the posture of businesses, knowing very well that the policy rate has been kept?
I think you don't just have to look at the policy rate. It's not only the policy rate being kept the same. It's not the only thing that has been announced. Even though it wasn't announced with much fanfare, I think the decision to raise the cash reserve ratio is going to bite a little bit. So there could be some credit tightening around the corner. So coupled with the uncertainty that usually characterizes an election year, I think businesses are probably going to approach the end of the year and the start of the new year with caution.
All right. Thank you very much, Dr. Patrick Esuming, for your time here on Business Live. He's an economist speaking to us on the back of the policy rate, which has been kept at 30%.